There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey everybody, welcome back, or at least welcome to the Hard Money Show. We are back for another week. Darren is in attendance. Of course, he's the guy with all the knowledge. We lean on him heavily when it comes to your assets and your portfolio and hard assets in particular. Gold and silver and a few others, which I'm sure we'll mention throughout the show. Reaching out anytime like now would be pretty cool. Darren and his team are standing by to take your calls and answer your questions as well. 1-888-335-8645 and Delta Harbour with a U. DeltaHarbour.com is how you reach out. Darren, we've been talking about this for years. It's been confirmed. You crystal balled this sucker a long time ago, talking about the threats of inflation. It's here. A lot of people now are finally playing catch up to you. So let's talk about that for a little bit to get the show open, pal. What do you say?
Well, listen, John, it's truth of the matter, and we are hearing it from multiple corners of the world. And the ultimate problem that we face right now is whether or not, as the federal bankers are saying, most of the central bankers around the world saying this is transitory, meaning it's temporary. But we know better. If you're a listener to the show, if you are out there in your day-to-day lives, you know what inflation feels like. You understand that your dollar does not go as far as it would in years past. And ultimately, this is when we want to challenge ourselves to think about what our future holds. If we're going to hit a period of inflation, even if it's mild inflation, if it's 5, 6, 7%, does our wage gap lessen? The answer to that is going to be no, it doesn't. We can't, under the circumstances we currently find ourselves in, get our wage gap decreased. So in other words, the average 9-to-5 guy, girl is not going to be able to catch up with this, and they're not going to see their wages increase for a full 4 to 5% a year. So that leaves us in kind of a quagmire, so to speak, John, because then we have to look at what our assets are. We have portfolios of wealth that are comprised of, real estate, stocks, bonds, cash. Do you have gold and silver? Through this show today, I want to talk a little bit about why I believe, John, that gold and silver have been the ultimate inflation hedge. And we can point to periods in history throughout the show that will help us to do that. But right now, we are hitting the summer doldrums. As we said on last week's show, price of gold and silver pulled back a little bit. We look at a 30-year chart of both gold and silver, we'll see June is a fantastic month for that and is to be expected. It happens pretty much like clockwork on a year-to-year basis. And right now, silver's holding in the 2580 to 2610 range, while gold is holding in the 1780 to 1790 range. And they're really, really strong at those points. I don't foresee there being, if people have been asking all week, much in the way of breakdown below these prices. And if there is, well, then, put your money on the table because these are opportunities that don't come around very often. So we want to take advantage of them if we're in the market to own gold and silver. Threats continue to be all around us from inflation. We've had lower than expected GDP numbers, a real estate Armageddon, which we talked about over the last month. It has been a very, very difficult concept to understand, but people think, for better or worse, that real estate prices are never going to pull back. They're never going to fall. We know that's not true. We know that if interest rates start to rise, mortgage rates start to rise, that puts undue pressure on the marketplace. And already this week, RBC is coming out and saying they expect a full 20+% drop in new housing purchases next year. And in part, that article talks about the fact that they expect this is in tandem with the threat of inflation that we're experiencing right now. You've got very, very high consumer debt levels, which is a very big concern for me personally. And you just have a lot of reasons why it's beneficial right now to hold gold and silver, physical gold and silver, as we do at Delta. And the history tells us that these are two majorly excellent performing assets during threats of inflation. This week, Stats Canada came up. They updated their consumer price index for May, and in fact, what they saw was that the index accelerated. The consumer price index, basically a measurement of inflation, it accelerated at its fastest pace in over a half a decade, and that's just the beginning of what we've seen for the month of May. I'm sure the numbers for June, when they come out, will be even worse. And for the most part, it's not base effect. This is gasoline, shelter costs, food costs, clothing costs. These are all big, huge problems as far as inflation is related. And we're not even seeing the tip of the iceberg, I think. And in fact, inflation, if we look at it right now, we're going to talk about it through the show, John, but it is rising at its fastest rate since 2011. So we put that all together and we look at CPI numbers on a weekly basis here at Delta. It's part of what we do when we're talking about gold and silver ownership. The CPI is rising at one of its fastest rates in years. And basically, the Measurement Institute in Canada that's looking at this is basically telling us that we have around an annual inflation rate of 3.6%. I have a good friend named John Williams. He owns a website called Shadow Stats, and he follows inflation rates as they were measured prior to the accounting gimmicks of the 1980s that were used to shelter people from the truth of what inflation really is. He says that the rate in the US right now is as high as 10% or more, and in Canada is at 8% or higher. So this is a really big problem. Shelter in the form of real estate is adding and contributing to this on a very big scale. And we're looking at real estate, and obviously we're concerned, everybody is, at where the peak might be. People are still piling into real estate. I still see homes that a year ago were selling for $600,000-700,000 that are now up near the $8, $9, and even $1 million+ range, which is a very bad sign over a short period of time. And it does not bode well for the average consumer, because the average consumer can no longer say, I can comfortably live under these conditions unless their wages increase, unless their income increases, or, as we talk about in this show every week, John, the idea of owning gold and silver becomes part of the repertoire as far as their investments are concerned. These are proven, tried, tested assets that have stood the test of time over thousands of years. And during inflationary periods, as we'll discuss longer on the show, we've had a tremendous opportunity presented to us, the last of which was just a decade ago, and before that, back in the 70s, for those that were around. So this is an exciting time, and we want to have a bottom line in our thinking, which is that we want to be part of the bigger picture. Inflation is a problem. We're going to talk more about it on today's show. The purchasing power that you had last year is not as good as it is this year, or pardon me, vice versa. The purchasing power you had last year is now lower this year because of inflation. It robs you of your purchasing power. So you want gold and silver in your portfolio. And the best part about it is gold and silver are averaging 10 to 12%, which means they're beating the rate of inflation, which means you are not losing any purchasing power. If the stock market blows up tomorrow, there goes your purchasing power. Your home prices drop tomorrow, there goes your purchasing power. Bonds start to lose value, there goes your purchasing power. But gold and silver thrive when the threat of inflation is real. So let's spend this whole show talking about just that, John. And it all starts with getting in contact with Delta Harbour Assets.
It sure does, Darren. We'll continue that after a short break. We'll also tell you how you get started with this hard asset investment a little later on in the show, because you want to get some into your portfolio for sure. So we will cover that. In the meantime, the number 1-888-335-8645 to reach out to Darren or Rob or Roy, or a member of the team at deltaharbor.com online as well. We'll continue. This is Hard Money on Sauga 960. Welcome back. Hard Money. Good to have you along. Darren Long is here. Of course, we are focusing majorly this show on inflation and the pitfalls of which you've been talking about for years, Darren. And this is, it's coming to fruition now, stronger and quicker than ever. You want to reach out, by the way, to Darren and the team anytime, 1-888-335-8645. That's the number to get a hold of the guys at Delta Harbour and start that part of your portfolio. If you're not jumped in with both feet yet to getting gold and silver physical assets into your portfolio, that's how you do it. Delta Harbor with you, because this investment is all about you at deltaharbor.com. Okay, back to where we were. Some scary numbers, but it's a bit of a revelation for some people, Darren, but you got to know, you got to pull back the curtain and let people know exactly what's going on, because they're not digging as deep in you and getting the information. So it's good that we're covering that for the remainder of this hour anyway, right?
Well, it is, and we've witnessed a lot of headlines as of late. And as I said in the first segment, a lot of heads of banks and Federal Reserve, Jerome Powell, and our head of Bank of Canada here, Tiff Macklem, they're all on the of the opinion, for the most part, that in this inflation is transitory, that it's not permanent, that's not here to stay. But they know full well that there is a lot of fear out there, and their job in part is to level that playing field a little bit. So of course you saw Jerome Powell, head of the Federal Reserve, last week come out and be very hawkish. He had been dovish the last few weeks, but all of a sudden he's very hawkish, and now he's expecting the market to take off. I don't know how. I don't see how it could happen. We have very little in the way of organic growth that we expect. And ultimately, what this is probably going to be is more like some type of post-COVID boom followed by bust. And that's what I predict will occur. But my greatest fear is that inflation was a one-trick pony for many people. And by that, you can use, let's say, lumber even as an example. John, I hear from people this week, we're talking, saying, oh, you were talking about the prices of lumber and they were rising. I wasn't the only one. There were lots, but they picked on me, this one gent in particular. And he said, look at it now. It's dropped 45% since its high in terms of its future pricing. This is not a concern. You know, we're going into a period where it's going to level off. You know, if people can't buy these things, then the consumers are going to slow their pace of buying, in which case the manufacturers are going to be left with no choice but to bring prices down. Well, don't always believe that, because what we've proven, especially in real estate, is that the majority of middle income earners and lower income earners, those that are still on the cusp of being able to buy, let's say, a condo or maybe a very small house, or a house that's out of a GTA location where pricing might be a bit better, they're not buying. Those aren't the buyers. These are upper tier people who are speculating in the last 5-6 months on home purchases. I look to my own area north of the city, where in my community, I know of at least 4 or 5 people that are actively speculating in that subdivision, buying homes. Nobody's moving into them. And in 6-7 months, they're selling the home again. And so they're just hoping that the equity continues to build, which basically means they feel very confident that real estate prices will continue to flourish, that they will continue to rise and go higher. But ultimately, when we look at these things like raw materials and building supplies and all those things, they are going to experience fluctuations. And that's a major concern, that people would see lumber prices come down and think, oh, there's no inflation here, because there really is. We're not looking at the bigger picture. We're not looking at the gas prices, which are now at $70+ a barrel US, when a year ago they went negative per barrel for a day. The price of a barrel of oil was at negative $15. People were paying you to take it. It was ridiculous. And we saw the better part of our oil industry in Canada over the last 12 months dissipate to nothing. But as these prices repair themselves, they also have an effect on our gas prices. So our gas prices go up. Again, that comes right out of our disposable income. What amount of money do you have at the end of the week that was going to gas last year versus this year? And we're at $1.20 to $1.30 per liter, with a barrel of oil at 70. That's where we were at per liter prices when the barrel was at 150 in 2008 on heavy speculation. So if the price of a barrel of oil goes back up to 150 a barrel, we're going to be paying $2+ a liter. People will be losing their shirts trying to just put gas in their cars. So this is a big thing that you have to watch and pay attention to, because gas affects everything. It affects food and how things get delivered, and all of those delivery services that we've relied on for the last 12 months, because we haven't been going to stores, all use gas. So that means that when you go online, not only are there delays coming from out of other countries and things of that nature, but there is big demand, pent-up demand for new school supplies, for clothing, for people to get out there and get ready for post-COVID. And ultimately, we're not paying attention, because we're just getting kind of sidetracked, if you will, about these little things that are really only white noise in the grand scheme of things. We have to pay attention to the big picture. The big picture is we're seeing wealth confiscation through the loss of purchasing power.
The number 1-888-335-8645 to reach out anytime during or after the show. No problem. DeltaHarbor.com. Yeah, it's interesting. The numbers are out there, Darren, but COVID over the last year has done a great job of just kind of putting a veil over everything. And everyone's been so hyper focused on the vaccines and getting better and getting outside and enjoying a beach or a patio with some friends. They've totally forgotten about that whole side of stuff you're talking about too. And it's going to hit them drop like an anvil pretty soon, I would imagine, on most people.
Well, I think, John, the proof is in the pudding.
Yeah.
And by that, I mean, there are still some publications outside of, let's say, those covering central bankers or economic policy, which are pointing out some obvious facts. And actually this week, I'll throw it in the newsletter most likely, but Financial Post came out and published an article through the week, which basically was just talking about a survey done by Angus Reid on what percentage of the population is actually acknowledging that inflation is either a threat or B, actually here. And it turns out that maybe people are listening to shows like this or tuning in this or seeing it happen, or they're just experiencing it firsthand. But in fact, in the article, the Post prints out that, and I quote, more than 9 out of 10 surveyed by Angus Reid say that over the past 6 months, it has become more expensive to buy groceries. So there's food, but we talked just a minute ago about filling up the cars. There's gas, and then buying a car. I don't know if anybody's noticed this lately, but I recently went up to my dealership, and I have an extra vehicle, which is a pickup, and I use it for a number of things I do with my family. And I took that pickup in for service, full service, oil change, lube, filter, all the stuff that you get done. Ahead of me in the line was a guy who had a larger pickup, and I really liked the look of his pickup. So I started talking to the guy, and I said, you in here just for a regular change? And he said, no, I'm actually, I bought the vehicle last year, paid $72,000 for the vehicle last year, and I'm back here to trade it in. I said, really? It's just a year old. It looks perfect. And he goes, well, they're giving me $73,000 for it. I said, that's $1,000 more than you paid. And he said, yeah, because this is in high demand and they know they can make their nice, ratio of return on this particular model. I'm buying a smaller model because I don't need this big of a pickup. I'm going to pocket the difference. Wow. So that's incredible. But that's the average person. And there you go. And housing prices to rent a dwelling. I mean, everything is just right in our faces, John. So, if it's related to recreation, motorhomes, RVs, Sea-Doos, Ski-Doos coming up for the winter season, boats. I mean, everything is up in price and we're just not acknowledging it. We're not accepting it. So it's nice to see the Financial Post and a few other publications actually saying that there's a concern here. People are recognizing it costs more.
We'll take a short break. We come back. We'll discuss who else is predicting inflation, what the banks have to say about it, and continue on with your discussion, Darren. And we'll tell you how to get these hard assets into your portfolio as well. We're talking about physical gold and silver. In the meantime, write it down, 1-888-335-8645 and deltaharbor.com, harbor with a U, deltaharbor.com online. We'll continue. This is Hard Money on Sauga 960. Welcome back. This is Hard Money. Darren Long, of course, your host, co-host here, John Scholes, talking about getting things into your portfolio in the form of hard assets, gold and silver specifically. A chat and more information on the way in just a little bit, exactly how to open up that and get that started with your portfolio. Head some of your other investments with some hard assets that are thousands of years being tried and tested and true. We'll give you details how to get started on that here in just a bit. But the phone number anyway, 1-888-335-8645 and deltaharbor.com. Of course, Harbor with you. Darren, take it away. Where are we going, pal? I know you want to talk about gold and silver, but there's lots on the show to get through today.
Well, I was saying earlier that both Jerome Powell, the head of the Federal Reserve, as well as the head of the Bank of Canada here, Tiff Macklem, both saying that inflation is transitory. So basically saying, look, don't worry about inflation. We've got this covered. Jerome Powell being the most recent to say he's hawkish about the economy, meaning he feels very strong about what the next few quarters are going to hold. I think it's going to be a post-COVID buying spree of sorts that people will get involved in. The stores reopen, boom, you're going to go out, you're going to do some recreation, you're going to go up to those cottages, spend in those small communities. We'll see quarterly GDP maybe rise, but that'll just be on pent-up, held-back savings. One of the things that I'm noticing is that these leaders are more often than not talking and using these terms transitory and saying they're going to allow the economy to run hot as if they have a choice. Their policy has been garbage. It hasn't worked worth the beans. They've had to print and print and print, and they can't withdraw that printing. They never can withdraw that printing ever. It's not going to happen. So inflation right now is about, according to the official stats, around 5% plus in the US and around 3.6% plus in Canada. And the CBC, interestingly enough, did a column on the 17th this month called Central Bankers Play Down the Soaring Cost of Living, stating that, and I quote, but as prices in Canada soared by 3.6%, hot on the tail of the US inflation currently running at 5%, after the economy opened up sooner, it is by no means clear those efforts will give you back the money you've lost. So CBC is saying, look, they're acknowledging that the economy is running, inflation is running a little hot on both sides of the border. But the reality is the average guy, girl, the person investing, mom, dad, the young kid who's just starting out, he's lost that purchasing power. He doesn't get it back unless he has a hedge, unless he has a way to protect himself. So if a person's losing purchasing power, meaning, listen, I make on an average annual year, let's say a few $100,000. And if that few $100,000 buys me, affords me a certain lifestyle, it just simply means that I'm going to have to make more, or I'm going to have to live less the following year in order to have the exact same lifestyle. And again, this is about, for me, raising the quality of lifestyle. I've heard lots of firms talked about the idea of owning gold and silver only as a hedge, or only as insurance, or only to protect what they already have. I mean, I'm not in it to just protect what I have. I use that all the time, and I think clients are smart to do so. But I also want to raise my standard of living. I want to have the ability to do more vacations with my family. I want to have the ability to have more in my real estate portfolio. I want to be able to invest in hard assets and have more collectibles, buy a couple of additional cars down the road and maybe use them as my summer fun mobiles or whatever the case may be, have a boat or a cottage. These are all possibilities if we plan the right way. Doesn't require a lot of work, John. It just requires the right attitude. And the right attitude really is looking back historically at what's happened, and then just kind of saying, okay, what is the likeliness that this occurs again? And we have a roadmap. That's the beautiful thing with gold and silver. It's not like cryptocurrencies with such a short time span where we don't know what the future holds for that. Gold and silver have been around for thousands of years. You said it yourself. You're one of the best hype men for our assets I've ever met. And you understand, and you've explained it to our audiences ad nausea over the years. But if we look back to the 70s, the same situation occurred. Money printing became a thing. It was an issue, especially in the US. Interest rates went much, much higher. By the end of the decade in the 70s, gold and silver, under the threat of inflation, the same thing we're experiencing right now, under that same very threat, blew up. And by blow up, I mean they rose. Gold rose from $35 an ounce in paper value all the way to $850 an ounce by January of 1980. Silver, even better, went from $2 an ounce all the way to $52 an ounce in the same time span. And it would be interesting if that's the only time it ever happened, but it happened 3 times prior to that in the last 100 years. And it's happened one time since, from a period of, let's say, 2008 to 2011, for sure. We had a threat of interest rates going higher. They were quelled by a change in monetary policy. We had a massive gap in the understanding of where we were. Subprime mortgages, all the triggers that occurred led to a financial crisis, and we had a really bad outcome. So we had to get our knowledge of economy together, and we had to look at what would save us during that time. Well, we knew money printing would work, and it did. But we've never ever stopped since that time. We've taken what was arguably a 1 or 2 or 3% increase year over year on average, and money printing in the US 76% up year over year. In Canada, we took basically the worst, I guess the worst year ever prior to this past year was Harper's 2008-9, 54 billion in federal spending. This year we hit 400 billion. And I just, it's 8 times bigger than what we've ever done. And I can't help but think we're in a massive science experiment that our leaders have no idea of the outcome. Our economists have no idea of the outcome. They're sticking with very outdated policies that protect and shelter the mainstream individual from the threats of inflation on paper. But in reality, that doesn't happen. And I think right now, if you look back at just last year to this year, John, the low in gold last year was actually around $1,450. Over the last 12 months, gold has been up to 2,000, and just during summer doldrums, it had a pullback, which is a great buying opportunity right now. And in silver, boy, it went from $1,150 up to $30. So at the 26 range, it's up almost 70% year over year. And ultimately, that's not going to be the same every year. But both metals are set to run right now. And I think over the next 4 or 5 years, we're going to get tremendous climactic moments in both metals, which A, protect wealth, B, give you some insurance, give you a hedge in your other parts of your portfolio. And you know what the best part about it is I just said a minute ago, it creates wealth. Yeah. Right? We can go out and get that extra cottage. We can go out and put that extra money towards the kids' college education or university. We can go buy that motor home. We can go buy that boat or have the extra car, just have the freedom to travel with our family. But I'm telling you, if you don't recognize this threat of inflation and the loss of your purchasing power, we're going to be in big trouble. You're going to be in a hole, and you're not going to be able to dig yourself out of it when the stock markets and the broader markets collapse, even if it is only temporary for a year or two.
We talk about a lot of this stuff each week on the show, Darren. We keep reiterating to people how important it is to make this part of your portfolio hard assets, gold and silver. Now, by hard assets, we mean physical gold and silver, not the paper kind. We refer to it, we talk about it, but we're getting actual metals into portfolios here, and details a little later on in the show how to set up that account and different ways to do it with Darren and his crew. And in the meantime, to have that chat or anything else we talk about on the show every week, 1-888-335-8645 and deltaharbor.com. That's harbor with a U, deltaharbor.com. We'll continue. Lots more to go. Stand by. Hard Money continues on Sauga 960. Hey, welcome back to Hard Money. Darren Long here is giving you free advice, free knowledge every hour during the week here on Sauga 960 and online as well. If you want to get hard assets into your portfolio, not sure how to do it, maybe these are fresh waters for you to dive into, this is the show, and these are the guys to show you how to do it. 1-888-335-8645, deltaharbor.com. And it's always Delta Harbor, harbor with a U.com, because this investment, these hard assets are all about you. And I've kind of been teasing it over the last 40 minutes or so, Darren. So let's actually do this. How do we get a portfolio started? How do you become a client with Delta? How does it all work, pal?
Well, John, our website is an easy place to start, deltaharbor.com, harbor with a U, as you just so eloquently pointed out. It is the best spot to start and get educated. If you don't know much about gold or silver, that is the starting point, which means no obligation, which means nobody breathing down your neck about questions related to who you are or anything of that nature, just an ability to freely go and examine some of our material and see what has happened. We try to be data specific. So where we reference the price of gold and silver, we always want to specifically talk about things that have already happened so that you can see it, as opposed to saying what might happen. We don't spend a great deal of time on this show talking about where we think the prices are going. Suffice it to say, every now and then we will touch on hallmark levels that we think are important. But that being said, the website will give you an idea, and once you're on the website, you'll be able to go to a portion of our website where you can compare and contrast all of the account types. We have a nice PDF that's downloadable and easily you can migrate through it easily, and there's really no need to really worry about having a person holding your hand at that point in time. So you can look through it. We offer direct home delivery. So if you just want to buy gold or silver, set up an account, fund your account, make your purchase, and then get it delivered to your home, you can do that. If you want to store your product with us because it's a sizable amount or you feel safer doing it, you have the option of doing the same thing. You can set up an account, fund your account, make your purchase, and it'll go into storage. It'll be in your name and it'll be allocated. And if you like serial numbers, that's a possibility for you. We'll gladly present those to you. and you can make changes via phone call. Buying and selling happens very easily. There is the registered account option. So if you want to put gold, physical gold and silver in bars and coins into your TFSA, it will be stored because that's the way it has to be by law. And then you can do that. We'll help you and walk you through that. Our partner on those accounts is Questrade. And you work and make your purchases and your sell orders through Delta, all your questions through Delta, but you have a beautiful online dashboard through Questrade, which coincidentally allows you to trade other types of assets and use other types of vehicles to do that. You can hold gold and silver also in what we call bulk bullion account. We talked about that last week's show. In fact, bulk bullion is just a way to get exposure to gold and silver without having to necessarily take home any product or have to pay higher premiums for specific bars or serial numbers. You basically have a very large sum of product that's in the vault, and as a client buys it, that product no longer is available to anyone else, so it becomes your product. It is 1-to-1, and you can buy and sell in 1 ounce increments, but you save a ton on premiums there. So if you're using the bulk bullion account, that is one way to save a pile of money in your pocket or buy more metal with it. And that collateral inside your bulk bullion account, those ounces you buy, are eligible for financing. So you can use them as collateral to finance up to 80% of the value of that purchase. And that is a way for you to just extend your buying capacity, give yourself a bigger foot in this marketplace, and also to view it from another angle, a way to, in fact, invest less dollars or risk less money while still owning physical gold and silver. So those account options are all there, John, and that's the initial part of what happens and transpires. If a person feels that they've got a comfort level and they want to touch base, we've made it very easy. You can have a consultation time set up where we take a half an hour and give you our undivided attention, ask questions about pricing. What does it cost to buy, Darren? What is a 100-ounce Royal Canadian Mint silver bar? How much does it cost to sell? What are all these things involved here? And those things are very easy to answer. Those are questions we get very commonly. And we'll put you through basically a process that I think is very easy to get through and very easy to open an account for. And whether it's doing one or all of those accounts in some way, shape, or form, we're going to be there with you every single step of the way. We'll hold your hand, we'll answer your questions, and the follow-up will be there as well. We contact our clients on a regular basis. We put a lot of effort into making sure that if they have any questions, those questions are answered. So I'll start just with a trip to the website, John, or calling the phone number.
I think a lot of people, Darren, if they're buying, just a little handful, they might want to have it on their person or in their home. But once it gets a little more of an investment, I mean, people lock up their bikes at night in their garage, never mind their hard assets of gold and silver. So the storage thing might be something that's really attractive to a lot of people who are making a 2-foot leap into a sizable investment. Where is it? How is it? And how does it cost? And what does it cost to keep it stored through you guys?
Well, where is it? That's a great question.
Yeah.
For clients in Canada, primarily we use one storage facility, which is located right near the airport. And it's a storage facility that was set up specifically with the intention of storing gold, silver, platinum, palladium. And that is the only thing it does. It is insured fully. It is completely secure. It's a Class 3 vaulting facility. So it comes with a very, very large number of safety features built into it. Your product is definitely going to be safe there. You can access the vault, which means you can see your product and you can make changes to that product when it's stored. And John, the only ongoing cost of using storage is the storage itself, which is 1% of the total metal value per year, and it's charged monthly. So if you have basically, $10,000 worth of silver in the vault, 1% is $100. Basically divide that by 12 and you get your monthly fee. And it's pretty easy to do. It's pretty simple and straightforward, and it doesn't really rely on too many complexities to make it work. So that bullion that you put in there can also be brought home at any time. So if you wish to take it out of storage and you want to put it into your own storage, or you have a safe or you want to put it in a safety deposit box, you can come and get that product out of the vault, take it home with you, or have it shipped to you at your cost. Storage is a great way to protect your product, John, also to insure it. It is insured, and that you won't get at home. So it's ultimately something that's very important to remember.
If I have, say, for example, in storage with you, I have 50 silver bars stored and I want to
Mhm.
sell bar number 12 and I want to sell bar number 43. Do I have that type of flexibility?
You do have that type of
Nice.
flexibility. It's your product, it is your serial numbers, and you can sell by the serial numbers. You can choose which bars actually get sold. Now, that being said, most people don't do it, but
Mhm.
it is great to know that you can. And even though majority of people don't actually go and visit their product at the vault, from time to time, people will go there and they will check their serial numbers. They will check them against what was reported in the inventory report that gets sent to them with the serial numbers, and they'll make sure that everything checks out. I'm happy to say that we've been in business since 2004, and this is a long time in this marketplace. Knock on wood, we've never had an issue to this point. I probably just jinxed myself. I hope not, but we've never had an issue with storage at the up to this point with respect to the serial numbers or the checks on the serial numbers. They're very thorough. They do a great job. There's security living in house. It is armed security, and there are a bunch of little things that we have to do to pass the test to get there into the vault. But this is the time, John. Gold and silver on sale right now during the summer months when it's quiet. It's a great time to do this before we get back to the thought of returning to school in September, before we get away for vacation break, and hopefully people will be able to take that vacation break. Buy gold and silver, put it in your portfolio. I believe personally that this will be a decision that you will not regret moving forward.
Start with a phone call, get the information more, and expand on what we just talked about over the last 9 minutes or so. 1-888-335-8645 is the way to pick up the phone, and online to deltaharbor.com. Harbor with a U, of course, deltaharbor.com. Have that conversation and start investing in some hard assets. We'll continue with hard money right here on Sauga 960. Welcome back. This is Hard Money with Delta Harbour Assets. Darren Long, of course, your host every week, filling your head with all the information you need, the key statistics, and all the breadth of knowledge you need to start this investment to bolster and hedge your portfolio. Hard assets is what we're talking about, mainly gold and silver. There's some other ones there as well, but it is all available to you in the hard asset form. You can hold it, you can carry it, you can lift it, or you can store it. Whatever you want to do, get it started. 1-888-335-8645, deltaharbor.com. Online, of course, Delta Harbor with a U is how that gets happening. Give Darren and his team a call. We've often talked, Darren, about the seasonality of metal. What is that? What is that all about?
Well, John, we talked about it a little earlier in the show, but ultimately the seasonality of metal is such that there are months in which we can look towards gold and silver and get a reasonable idea of whether or not price will fluctuate upwards or trend upwards or trend downwards. And this is without any bias towards any particular trigger or event happening that repeats itself, or whether the interest rates are going higher, lower, more debt being printed, problems overseas, something that would typically be a trigger event. This is just looking at prices as they lie without any other information and saying what months do typically prices of gold and silver rise versus what months do they typically offer buying opportunities. One of the best buying opportunities that we generally see is during the month of June. 30 years of data and seasonality in both gold and silver. And we've been touting this recently because there's a lot of analysts out there, big ones, that probably some of our listeners either have listened to or watched on YouTube, maybe even bought gold from themselves, that talk about all these triggers, and never ever once do they point out the obvious, which is that there's seasonality involved in gold and silver. So while they might be looking for the elephant in the room, or the conspiratorial part of the story as far as pricing is concerned, what happened this week, central banks did this, this guy did that, or this was said and it changed everything. Sometimes it's just seasonality, and that seasonality tells us that June is a great buying month. You never know what the price is going to do. And prior to the onset of June, the price of gold could have risen back to 2000 and the price of silver back up to 30. It was very close to doing both metals, but ultimately it pulled back in the month of June, as it does pretty much every year. And we're presented with the opportunity. And so to take hold of that opportunity, A, says you're astute, B, says you're listening to what people are telling you, and C, it tells me that you're going to get a good price, whether you already own and are cost averaging, or whether this is new to you. It's an opportunity to go with this. And John, I can't point out enough that moving forward, after we've had a show talking about inflation, And I do pick on this idea of what inflation is and how it relates to gold and silver quite a bit in my writing and what I talk about on a normal basis. And the four pillars, one of them is inflation, along with fiat currency and geopolitics, supply and demand. We talk about those things all the time, but inflation is a very key thing right now, because at this very moment, the way I see it is the economy only has two choices moving forward: inflate or implode. And most people are going to say, well, which one, Darren? Which one? How do I know? Well, I tend, as I said earlier in the show, to follow a couple of different important people, but one of the people I follow is John Williams of shadowstats.com. That's shadowstats.com. And he has talked about this idea of inflation or implosion quite a lot over the last couple of weeks. Both the Bank of Canada and the Federal Reserve in the US have been creating money at a pace that has never been seen before, not even as fast as the US created money when 2008 financial crisis occurred. You're basically up about 75% in money creation year over year in the US. And in Canada, we just printed nearly 400 billion worth of new debt in 12 months. We often look back at the years of Harper, and when he, especially in 2008-9, when he I say this with a grain of salt because I did like Harper very much, but he had no choice. Our economy was in shambles, or the threat of being pulled down like the U.S. He threw out $54 billion, and at that time we crucified him for it. We absolutely crucified him for it. We said, there's no way, we can't do that. We're going to be swimming in debt until we're old and gray. Our children's children will be swimming in debt. $54 billion. That was the most we had ever done up to that point in time. It got our economy through, and it brought us into a new cycle whereby our number one economic increase or input into the economy was housing, real estate. Everything hinges on that. But if real estate, because of inflation, starts to slow down, and RBC is reporting this week, they expect up to a 22% decrease in new home purchases in 2022. So if it slows down like they suggest it will, housing prices will come down. It could be a really, really bad thing for our economy. And inflation is going to be a huge threat. It's going to reach double digits. Mark my word. We are going that direction. They're going to let it run hot, which means the more they let it run hot, both in the US and here, the more likely it is we are going to be unable to control it. So the outcomes will no longer be in control. We're just going to have to go through the phase. They're going to throw tons of money at it, and then they're going to pull the money away. If they pull it too fast, implosion. If they keep putting money in like they're doing, inflation. There's only two routes to take here. You can't stabilize this economy. It needs the liquidity. And how do we get the liquidity? We keep printing the money. So is there going to be a 70s style of inflation whereby inflation rates get to, 10, 12, 13%, mortgage rates hit 20 plus percent? I don't know. I can't say for sure, but I think I'm very confident saying that we'll hit double digits. And what I do know is that assets like gold and silver, fortunately, have had tremendous track records during the threats of inflation. Once inflation sets in, different story. Once inflation is at its peak and then migrating towards the downside, different story. But ultimately, I believe that right now we've been presented with one hell of a buying opportunity, John, and I'd like to see listeners of Sauga take advantage of that. Listeners to our podcast take advantage of that. Look at your wealth. Are you happy? I mean, are you satisfied? And at the end of the day, this is about you. This is about you, the consumer, and what you deserve to have in your life. You work hard. Why can't you play hard, right? COVID aside, you've put savings into your accounts. There are better ways to make return on money. Gold and silver are not the only ones, but they have a good track record. They've been really beneficial for a lot of people. And the truth is, John, if you thought you could increase your standard of living, wouldn't you want to try? Wouldn't you want to do it with reasonable risk? I mean, listen, we don't get ahead without risk, but ultimately we want to tame that risk. So if you're going to add some gold and silver, maybe it's not your whole portfolio, but right now, with the prices the way they are and with what the outlook is for gold and silver in terms of where the economy is going to help them to get, I suspect that we're going to be very pleased if we're putting money into gold and silver, physical gold and silver at this particular time.
Is this something that you would suggest? I mean, you suggested anyway, you should always have hard assets and gold and silver from you guys as part of your portfolio anyway, depending on your percentage and how much room you have. But is this something you would take? I know we got to wrap it up in a couple minutes, but is this something that you should do? And like you say, cost average over years? And why not just keep buying this when you can until you're 65? Use it as a retirement tool.
Well, listen, that's the approach that some people take, John. We have a percentage of clients, and throughout my life, I've known a percentage of people who, in fact, do keep buying over the course of a very long period of time, and they are using that asset to pass on to the next generation.
Mm-hmm.
What goes faster than cash? So if tomorrow's my time to go, my children are left with a trust, they're going to spend that cash as fast as they can. We know this to be true because we're not disciplined. We're just not disciplined. But if they own a hunk of gold or silver, well, that adds a level of complexity in terms of converting that into fiat. Maybe for people that are planning long term in an estate, they might really benefit from having that to pass on to the next generation. But there are also those people, John, like myself, who just use and are opportunity takers. When the market presents itself with a good opportunity, I take it. I use gold and silver to make my life better. That's the bottom line for me. It's not necessarily just a tool for insurance. I don't just own it because I feel like tomorrow the world's going to fall apart, or we're going to, slam into a wall and our economy is going to implode to nothing. I use it to make my life better. And it has worked so far, knock on wood. But the way we're heading, I can't see that it wouldn't be the same for anyone else that wants to be part of this market. And to get a good value, to get a good buy, and to be able to say you bought it at a reasonable price, that's what this is all about. So we want people to come to Delta and be part of this gold and silver revolution.
Conversation to be had as we wrap it up for another day. 1-888-335-8645 to reach out by phone, online as well, to deltaharbor.com. That is Harbor with a U, deltaharbor.com. We'll catch you next time right here, Hard Money on Sauga 960.